Hey guys, so today we've been discussing with my partner Taras Lawi here in the office between the difference between fundamental analysis and technical analysis. So I just want to take you a brief breakdown we've done here, and we want to show you the difference between technical and fundamental analysis. So basically when you're trading technical analysis, we're basically trading chart patterns, what we're actually seeing, price action, that's basically technical analysis, the technical aspect of forex trading. When it comes to fundamental, now that's a whole different game. You need to understand things like interest rates, how it's affecting a certain economy, debt cycle, long-term debt cycle, short-term debt cycle. Are we in a contraction phase or an expansion phase? Are we in a depression or a recession? You need to understand all that and put it together and understand where the market is going. So that's more of a fundamental approach. So depending on which side you're more interested in, the side you find that suits you best, you decide to go that way. Personally, we do the technical analysis, but we discovered there's a problem with many traders. Many traders go and start trading the news. Now, news is a category of fundamental. It's not really important, but many people start trading the news and they assume this is the fundamental analysis. So for example, people who trade the fundamental analysis are people like Ray Dalio. So if you've heard of Ray Dalio, he runs a company called the Bridgewater Associates. Currently they have about 130 billion US dollars under management. So they look for long-term debt cycles, such stuff. Are we in expansion? That's what they do. But there are other people who focus on technicals, what I'm going to talk about. So what are the advantages and disadvantages of trading the news? So when you're trading the news, I'll start with the news side, then I'll come to technicals, what we personally do here at Financial Hub. So when you're trading the news, there's first priority. So the examples of Goldman Sachs, JP Morgan, such people have paid to get information. If you know or if you don't know, in the 21st century, information is the most valuable commodity. So there are people who have paid for first-hand information. So they get this news before we actually get it. The people trading from home, from our offices. When you hear something coming out of the Bloomberg, they are being presented. You're listening to Tom Keene, Francine Lacroix. By the time they're talking about it, these big people, the Goldman Sachs, JP Morgan, have already executed their trades. By the time you're taking your trade, they're coming out. So that's when you enter a trade, they're coming out, the trend direction changes. So there's first-hand priority, which you do not have an advantage over them. Two, when you're trading the news, it is very noisy and very volatile. Very high risk. What do I mean? When news comes out, let's say for example, Jerome Powell, the Fed chairman, whenever he talks about the interest rates in America, whenever he releases that news, let's say if he's increased it or if he's tightened it, if he's reduced it, what happens is that volatility comes to the market. There's a lot of reactive response when that happens. So it's a lot of high risk because you're not sure which side is going to go. By noise, I mean it can shoot up, then all of a sudden go down. So it can be really confusing. You're not sure which side the market is going to head. The next thing I can talk about when it comes to news, you have to have an understanding in economics well. You need to understand economics well in order to interpret. So these are the two key words, in order to interpret the news well and correctly. So if you don't know about interest rates, how it affects the market, inflation, if you do not understand those things and you're trying to trade the news, you're going to get a really hard beating. So if you do not understand economics, don't disturb yourself trading the news and all that. The next thing I'll talk about is the news. People who trade the news are trading on reaction. Very reactive approach, which is a lot of irrationality. So many newbies like trading this. So we get people telling us, we're trading the NFP. What do you think is going to happen? I don't know what is going to happen. I don't care what is going to happen. I'm a trader. I'm focused on technicals. If the chart shows me we're going up, I'm going to trade up. If it shows me we're going down, we're going to go down. But this person who's trading the news, they're waiting for NFP, non-farm payrolls, whatever news that comes out, they start trading it. They don't understand why we're going up. They just see the charts going up and they start trading. So there's no good approach. It's not rational. So that's another destructive approach that comes with this. The next thing I'll talk about is very, very limited. When you're trading news, you have limited time to trade. For example, NFP comes out around 3:30 here in Nairobi, which is around 8:30 in the US, early morning. So you have to wait until that time in order to trade. Before it, you can't really trade. What's the point of that? You have very, very limited time. So on the other side, on the bright side, we have technical analysis, what we're focused in, what you see us doing here on the charts on a day-to-day basis. This is basically technical analysis. This is what we're focused on, and I'll tell you why we focus on this. My first main point, what I see on the chart is what everyone is seeing, okay? So what I'm seeing here, what you're seeing happening here, the market going up, market going down, is what the people like Goldman Sachs are seeing, JP Morgan, Ray Dalio, they're seeing the same things I'm seeing. So it's more of an objective approach. It's much more objective because we can see the same thing. The patterns that are forming, let's say a double top, head and shoulder, whatever pattern is forming, whether we're in a trend going up, every single person is seeing it. So it's a much better and objective approach. The next thing, it's very analytic and very responsive. What we mean by that, for example, we're having an uptrend. So an uptrend, we know is normally formed by mainly 3 main impulses to the upside. So by that, what I mean, when the market shoots up, we're waiting for a certain correction, then we enter it and go long. We wait for another correction, we enter it and buy and go higher with it. So it's a much better responsive. We're not reacting to what the market is telling us. We've prepared for it, then the market shows us and we enter that trade, and that's what happens. So it's very analytic, unlike this one, which is very reactive. You're not sure which trend the direction is going to go. The next thing, it's easier to form a trading edge. By that, I mean basically what we've mastered here, what we've been doing for many years, forming an edge. For example, I use Elliott wave analysis. My partner Taras uses pivot points. So he has an edge in pivot points, knowing the levels the market might turn. Personally, I use Elliott wave. I'm looking for those impulses. So we have really specialized on our edge because the market has a pattern, a cycle that is always repeating. So that's why we really emphasize on understanding technicals. For us, it's a much better approach. Once we start getting that big status, big accounts, then we can start going into Goldman Sachs, analyzing the fundamentals, looking at that long-term approach of the markets. So many investors focus on fundamentals. People like us who are traders, there's no point in focusing on fundamentals because we're just in and out of the market at very short term. So that's basically what I had for you guys today. I hope you enjoyed. Have a wonderful weekend, and I'll see you guys soon. So guys, if you want to understand what we've talked about, the technical analysis, we launched our book the other day, A Template for Understanding the Forex Market, where we've covered an in-depth look at all this technical analysis, all these charts that I've talked about. So if you're now looking and you're seeing a lot of shenanigans, you don't know what is happening, you can purchase our book. It goes for 2,500. You can contact us wherever you're seeing this video, either DM or if it's Instagram, you can DM us directly and we'll get back to you on how you can purchase our book. We're located at ICA building on the 17th floor. So make sure you order a book and understand how the Forex market works before you come and start gambling here. Okay? So that's all for you guys, and enjoy your weekend.